Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Connor Campbell, financial analyst at Spreadex, and we're going to look at a couple of things. First off, the pound and then the FTSE. Pound against the dollar. Given back a bit. I mean, December probably not its best month, certainly after a strong November.
Yeah.
But some pretty okay inflation data this morning. We've got the Bank of England on Thursday with kind of Brexit deal maybe being done. Actually, there's a lot of positives to take away from the
Yeah,
pound.
it's interesting this week. Well, first, saying the Brexit, it sort of lost those its Brexit boost pretty quickly. But overall, still, you know, the background of that is now humming along positively rather than negatively. So it's, I guess, it eases the headache of Brexit and maybe calms some of those jitters, even if it wasn't enough to sustain a long-term rally, above 1.35. In terms of this week, it's a stupidly busy week, really, from the UK and the US side of things. Like you said, we had the UK inflation today, that's 3.1%. So it was hard to see how the pound was going to react to that, because on one hand, any sign that things might be easing for UK consumers heading into Christmas, arguably a good thing, but the fact that it's crept above 3% now suggests that maybe the Bank of England got it right to raise rates when they did, and also perhaps that'll ease their slightly dovish stance they took after they did hike at the start of November. Then wage growth on Wednesday, that's meant to come in, I think, including bonuses, at 2.5%, which is the best. That's the best reading for a while. And again, that slightly mitigates the increase in inflation that we've seen today. Retail sales on Thursday, I think they're meant to rise very slightly, but still from 0.3% to 0.4% month on month. So for the first time in maybe a while, that little trio of data in the UK is looking okay. It's still not great, real wages are still falling and stuff, but it's a lot better, especially heading into Christmas. It's, I guess, slightly reassuring to see that things haven't got any worse and there are signs of some improvement. Then on the other side, on the dollar side of things, you've got the US inflation figure on Wednesday. That's sort of the precursor to the Fed meeting on Wednesday evening. I think that figure's meant to jump from 0.1% to 0.4%. That's a decent rise, because the US inflation has been an issue for the Federal Reserve in almost the opposite way it has been for the Bank of England. Again, I think it's more likely what tone the Fed strikes on Wednesday evening than what they do. It's basically locked on they're going to raise rates. So that's not, the markets aren't going to react to that. I think it's, the issues the dollar has had recently has been that, say, like the last Fed meeting minutes suggested that the pace of hikes perhaps in 2018 wouldn't be as fast as expected. Does that inflation figure on Wednesday perhaps shift them slightly towards the hawkish end of the spectrum? I think so. That's what people are going to be paying attention to on Wednesday evening. Just what kind of tone the Federal Reserve sets for 2018. Obviously, that's complicated by the fact that Janet Yellen is leaving. So there is other factors going on there. But I think that's what people are going to be watching on Wednesday evening. Then you got Bank of England on Thursday. I'm not quite sure really what I doubt it's going to be particularly exciting on Thursday what the Bank of England says, but
Maybe a Christmas lunch.
if there's going to be anything, again, I guess it's going to be some kind of hint as to what is going to happen in 2018. I think if anything does come out of that report on Thursday. But then, to be honest, that Thursday meeting follows the Wednesday Fed meeting. There's also UK retail sales on Thursday morning. There's also then the ECB meeting on Thursday. So there's a lot on Thursday to contend with. And I think an unexciting Bank of England statement might just get lost in the fray a bit.
And what do clients think of cable at the moment?
They've been buying around, say, like the 1,335 mark. I think, especially, we've seen the decent inflation figure this morning and what looks like to be a decent set of wage growth and retail sales figures on Wednesday and Thursday. Again, I think it's going to really depend in the second half of the week on what kind of tone the Fed strikes, but we've seen them err on slightly the dovish side of things in the last meeting minutes. If that remains the same, then the pound could push back above, 134, back maybe towards 1,345. I'm not quite sure if we can get to 135, just because there's so much going on this week that things might begin to cancel themselves out. But like I said, most of our clients buying around the 1,335 mark.
And moving on to the FTSE, doing rather well. Is this down to a bit of weakness in the pound, or is this something new and different finally?
I think you did see on Monday especially, you had a pretty healthy performance from the miners.
Yes.
And then this morning you've had issues with that the oil pipeline that's boosted the oil stocks. So the FTSE has got a decent performance from its commodity stocks, which that's always a good thing for the FTSE, given the heft of them in terms of the FTSE's makeup. However, if you look at when it saw that massive sort of 7,400 crossing performance, it did basically correspond with the pound losing its Brexit gains. So I do think the old good for the pound, bad for the FTSE, vice versa correlation is alive and strong heading into the new year. In terms of what our clients are doing, they basically started selling the moment it crossed 7,400. I don't think they're interested in it being above 7,400, especially not towards 7,450 to 7,460. Again, like we were saying though, with our clients buying the pound, it makes sense that then you've got the inverse of that and them selling the FTSE. Again, I do think it likely depends on what the pound does in the second half of the week in relation to the Fed meeting, I think, and the wage growth and retail sales figures. I think that it is, given that it's such a busy week for data that tends to move the pound, I can't see the FTSE not moving in relation to what the pound does this week. We have seen signs in the last few months, or last couple of months, sorry, that relationship has maybe weakened a bit, but I just think due to it's so weighted towards pound moving data that I don't think the FTSE has a chance to break out on its own this week.
Good stuff. Well, in the meantime, Connor Campbell, financial analyst at Spreadex. Thank you very much for joining us.